What's up traders, welcome back. Today we'll be looking at Nasdaq using the simple trading plan that you guys know from this channel. So let's dive in. What's our first rule? Identifying the liquidity or PDRA that we are going to trade from. So we're on the daily time frame. We have a previous day's high and the previous day's low as a form of liquidity on the lower time frames. Above that level, we have the order block that took out the liquidity. So that also makes it a valid level to trade from. So now that you have identified your levels, all you can do is go on the lower time frame and wait for those levels to be traded to. So let's go. So we're on the 50-minute time frame. So right now you can see that we've traded through the first level twice, with the second run being influenced by the news drive. And all of this is happening before our trading time, which is at 9:30 Eastern time. And for those who don't know, there's the equity open. So even though you can get trades before that time, you don't want to build a bad habit trading outside your trading plan's trading time. So let's see what happened during our trading time. So we have price trading to the daily order block that we have identified on the daily time frame. So now that we are inside of our trading time, we're gonna drop to our entry time frame and start looking for our setups. So we're on the 1-minute time frame and we're going to go to model 1. On this time frame, you only have to do 3 things. The first one is identifying the potential order block, which is the candle that traded into the level that we have identified. In this case, it's a daily order block. So right now, the candle that traded into that level is this one right here. So the second rule on this time frame is waiting for it to be activated, which happens when price trades below that order block because we are trying to go bearish. Hence, we have a negative sign in front of the order block's abbreviation. So let's see what occurred next. We have price trading below the order block, which means that now it's active. So if you are not in the trade yet, you can always enter on the retest. What matters is knowing that that's your entry level and your stop goes above the swing. Because we have a fair value gap with a market structure shift exactly above the order block. So we are giving ourselves room in case price wants to rebalance that fair value gap. For confluence, we also have a huge fair value gap in the form of a sell side imbalance and buy side inefficiency. So since it's too big, you can use the 50% of the range for entry. And you always want to target the opposite swings, especially the low hanging fruit. At the same time, I also saw that we have some form of a trendline phantom forming liquidity. Plus it's combined with equal lows. So let's see how I entered on the actual market, which is going to be a commentary over my screen recording during my trade session. So you can see me highlighting the order block that took out the liquidity. While this was happening, I also zoomed out to look for any form of divergence. I have mentioned many times in this channel how you should use divergence as a confluence. I was watching the order blocks low, so I had to calculate the size of the pips so that I can calculate the size of my lot size with respect to risking a maximum of 1% of my account. So you can see me executing as we get to the level. You could use a sell stop to enter same time or a sell limit for a retest, but in this case I used an execution because I didn't want to wait for a retest because sometimes Nasdaq can be very fast. So that's one way how I enter my trades. If you have any questions, don't be shy to send me a DM or leave your comment down below. If you appreciate the content, don't forget to like and subscribe. Until we meet again, das Vidania.